This is Introduction to Technical Indicators, Enhancing Your Trading Strategy, brought to you by the Falai Trading Academy, where we trade smart and invest better. My name is Ade Falai, and this is the next in the series, The Beginner's Guide to Trading, and we'll be looking today at technical indicators, which are my main tools that I use to trade the various charts. We'll start with what technical indicators are. Technical indicators are mathematical calculations based on price, volume, or open interest, which is the number of long and short trades in the market. They add structure to what you see on the charts, making it easier to spot patterns and trends. Types of indicators and their purpose. We have trend indicators, and these help you identify the overall direction of the market. So the market is either bullish, which means price is rising, bearish, which means price is dropping, or ranging, which means price is trapped between two points, which a higher price and a lower price, and you find price or candlesticks being produced within that range. An example of a trend indicator would be the moving average, which is one of the tools I use to trade the various charts. And here's an example. The moving average is the blue line you see running across the screen from left to right or right to left, whichever way you want to describe it. And you notice that when price crosses the moving average, it usually produces a number of candlesticks in the same direction of the close. So a bearish candlestick will usually be followed by a series of bearish candlesticks. We have a reversal here, but the trend carried on. And a bullish cross will usually, not always, result in price moving in a bullish direction, which is higher highs and higher lows. We see here also bullish candlesticks, a couple of reversal candlesticks, but overall price kept increasing when it crosses the moving average. Not always, but usually. And we all know trading is statistical and probability based. Momentum indicators. Momentum indicators are supposed to show you how strong a trend is or if it's losing steam. An example would be the relative strength index, which is one of the indicators I've used in the past and still use occasionally. The RSI is an off-chart indicator, which means it's below the actual charts, and I've changed the color of the two lines here. So the green crossing the red and staying above the red is a sign that price is moving up, bullish. And the red crossing the green, with the red being above the green, is a potential sell signal. So these show you potential turning points in the market. Sometimes these turning points lead to trends. Sometimes they're actually fake outs and price immediately reverses in the opposite direction. So as always, indicators are guides to help you make the right trading decision. So you don't just follow indicators blindly. Next, we have volatility indicators, and these measure price fluctuations over a period of time. An example is the average true range, which is another indicator that I use, and this is one that I always use no matter what I'm trading. And the ATR, the average true range, tells you how much price has moved over a set number of candlesticks. The default setting is 14, so the ATR 14 shows you the movement in price over the last 14 candlesticks. And this gives you a range to work with. And the value of the ATR in this case is 74.9. So like non-Japanese yen pairs, it is a 4-digit number and it begins after the decimal place. So in this example, the average true range is 74.9, which is the range of price movement over the last 14 candlesticks. And I'll be talking about how I use the ATR as well. Next, we have volume indicators. Volume indicators analyze the activity level behind price movements. So how much of a push is behind the candlestick that is being produced or that has been produced. So an example would be the unbalanced volume. graphical example, unbalanced volume is another off-screen indicator, OBV, and you can see in this example that it's minus 120. So this shows that there's been a drop in the unbalanced volume. Now you can use this to add to your criteria for buying or selling. So for example, you could say if OBV falls, there's a lower probability of the move being a trend, and if OBV rises, there is a higher probability that there'll be momentum behind that price that has been printed on the charts. Like I said, no indicator is 100%, so you just use it as a guide. Tips for using indicators effectively: keep it simple. Don't overload your chart with too many indicators. When I started using indicators, I probably had about 6 or 7 indicators, and depending on what I'm trading, I still have a number of indicators, but I'll say on average you need maybe 3 or 4 indicators to have a trading algorithm that you can work with. It's better than having nothing. Number 2, understand the indicator you're using. Know how it works and what it's telling you. Don't just rely on it blindly. Like I've already said, indicators are guides and they're not 100% to tell you what to do, but you can use them in your analysis of whatever you're trading. Tips for using indicators effectively. Number 3 is use indicators to confirm. Indicators should support your analysis, not replace it, and always consider price action and the context of the indicator you're using. Number 4, backtest your strategy. Test your chosen indicators on historical data to see how well they perform. There's no use just accepting an indicator will be right most of the time if you haven't tested it yourself and recorded your backtest results, because that will be your guide for trading moving forward. So combining indicators for better results. We've spoken about individual indicators, and no single indicator is perfect, so combining them can provide more reliable signals. This is how I trade. An example strategy could be to use a moving average to identify the trend direction, and then you add RSI to check if the market is overbought or oversold, so in stocks, commodities, and bonds. And by using multiple indicators together, you reduce the risk of false signals. And, sometimes you get an engulfing candlestick, but it could be at a point where the trade is actually reversing. And if your indicators don't confirm the direction of the engulfing candlestick, it may be a sign to wait and see what happens next. I always advocate for waiting as opposed to rushing into trades. Rule for buying: candlestick closes above moving average and RSI displays bullish momentum. Rule for selling: candlestick closes below moving average and RSI displays bearish momentum. So these are simple rules that anyone can follow, and you need rules in trading, otherwise you're trading blind and you're relying on emotions, and anyone who trades relying on emotions is bound to end up always at a loss. You might get the occasional win, but if you don't have something you're relying on that has been back tested and statistically showing that your way of trading is probably going to be successful, then I would strongly recommend having rules. Otherwise it won't play out well. So moving average and RSI. So the moving average, as we can see here, is on the screen, an on-screen indicator. The off-screen indicator is the RSI. And if we say we buy when the candlestick closes above the moving average, which is the rule to buy, and the RSI gives bullish signal, which is to buy, then we can take this trade. And as you can see, eventually price starts to rise, and this is a higher probability to hit your take profit. Final thoughts: technical indicators are a great way to enhance your trading strategy, but they're just one piece of the puzzle. Practice using them on a demo account, experiment with combinations, and refine your approach over time. Remember, unless you have backtest results written down, you have no business trading any particular strategy on a real money account. Any experimenting you're doing should always be conducted on a demo account. And in the next video, we'll take things further by discussing how to manage risk effectively on your trades. All the indicators I've used in this video can all be found on TradingView. TradingView provides thousands of indicators that you can combine or use on their own to analyze the charts. I've put an affiliate link in the description below. If you click that link, you'll be able to gain $15 towards the cost of your first subscription. So check the link in the description, and I've also put all the videos prior to this in the description below. So you can either watch this video first or go back, watch those videos, and then come to this.